Most people think financial disaster happen to other people, not to them, not to smart people, not to educated people, not to people who work hard and save money. But history tells a very difficult story. History shows that the biggest financial mistakes were not made by pure people or educated people. They were made by banks, by governments, by the smartest people in the room, and they were made because of same mistakes over and over again. Today we are going to walk through the biggest financial mistake in history, not to scare you but to protect you, because every single mistake you are about to hear has one thing in common. Benjamin Graham warned us about all of them. Every principle he built, every rule he created, every lesson he taught was designed to protect ordinary people from exactly these disasters. So pay close attention, because history does not just teach us what happened, history teaches us what is always about to happen again. Let us begin. Chapter 1: Buying what you do not understand. The first and most repeated financial mistakes in all of history is this: people buy things they do not understand. They hear a word, they see a number going up, they watch their neighbor getting rich, and they jump in without asking a single serious question. They This happened in the 1630 in Holland with something called tulip mania. Tulip flower, simple flower, they grow in the around. At the peak of his madness, a single tulip bulb was selling for more than skilled craftsmen could earn in an entire year. People were selling their houses, liquidating their savings, borrowing money from neighbors, all to buy tulips. Why? Because the price was going up and they did not want to miss out. Nobody stopped to ask the most basic question: what is the real value of tulips? It is a flower, it is grows, it dies, it has no earning, no profit, no future cash flow. But when prices are rising, everyone around you is getting rich. Logically is absurd. Fear of missing out takeovers, and that fear has cost people everything throughout history. Benjamin Graham built his entire strategy around one idea: never buy anything you cannot explain and value with real numbers. If you cannot calculate what something is truly worth, you have no business owning it. This lesson is hundreds of years old and most people still have not learned it. Chapter 2: Borrowing too much to chase more. The second biggest financial mistake in history is using borrowed money to invest. In the late 1920s, Wall Street was on fire. The American stock market was rising every single month. Every year brought a new high. Every felt unstoppable. And banks started offering something very dangerous. They allowed ordinary people to buy stocks on margin. This means you could put down $10 and borrow $90 to buy $100 worth of stocks. If the stocks goes up, you keep all the gain. But if the stocks goes down even 10%, you lose everything you put in. Millions of Americans borrowed heavily to buy stocks. Farm bought, teacher bought, shopkeeper bought. Everyone was using borrowed money to chase bigger returns. And then in October 1929, the market started falling and it did not stop. People who had bought to invest were wiped out completely. They did not just lose their profit, they lost their home, their savings, their business. The borrowed money multiplied their losses just as powerful as it had multiplied their gains. This single mistake helped trigger the Great Depression, one of the worst economic disasters in human history. Benjamin Graham survived this crash, and it shaped everything he thought for the rest of his life. His most fundamental rule was never invest with borrowed money. Invest only what you can afford to lose without destroying your life. Because when things go wrong, and sometimes they will, borrowed money turn a bad situation into catastrophe. Chapter 3, Following the Crowd Without Thinking. There is something deeply dangerous about watching everyone around you make money. It creates a feeling that you are missing out, that you are being left behind, that you need to act right now before it's too late. This feeling has triggered some of the worst financial disaster in history. In the late 1990s, the world got excited about the internet. Companies were being created every single week. Most of them had no products, no customer, no profit. Some of them had no real business plan at 11, but had dot com in their name. An investor could not throw money at them fast enough. Stocks prices of internet companies rose by hundreds, sometimes thousands of percent in just few months. People who had never invested in their lives were opening trading accounts. People were quitting their jobs to trade stocks full time. Everyone was talking about the new economy. The old rules no longer applied. This time was different. And then in the year 2000, it's a collapsed. Trillion of dollars of wealth disappeared in less than 2 years. Companies that were worth billions become worthless almost overnight. The people who suffered most were the ones who joined last, the ones who saw others getting rich and could not resist jumping in at peaks. Benjamin Graham called this behavior speculation, disguised as investing. When everyone is rushing in one direction, the intelligent investor slows down and asks hard questions. What is this company actually worth? What are its real earnings? What price am I paying compared to that value? If the answer do not make mathematical sense, no amount of excitement and momentum change the reality. This crowd is often wrong, especially at the most expensive moments. Chapter 4, Trusting Numbers That Were Never Real. Some financial disaster happened not because of bad decisions, but because of bad information. In the early 2000s, one of the largest energy company in America was celebrated as one of the most innovative and successful business in two world. Financial magazines named it one of the best company to work for. Its stocks were rising, its executives were praised everywhere, but behind the polished image, the number of were completely fake. The company was hiding billions of dollars in debt. It was reporting profit that did not exist. It was creating a picture of success that had no connection to reality. What when the truth was finally revealed, the company collapsed almost instantly. Thousands of employees lost their jobs, their pension funds were wiped out, investors lost business billions. This disaster proved the something Benjamin Graham had always thought: never trust a story, always verify the number yourself before you invest in any business. Look at the actual financial statement, look at the real cash flow, look at the real debt level, because number can be dressed up to look beautiful, but the truth always surfaces eventually. And the one it does, the people who never question to story are always that one holding worthless paper. Chapter 5, Believing that prices only go up. Perhaps the most dangerous idea in all of financial history is this: the belief that prices a particular market can only go up and will never come down. In the mid 2000s, this belief took hold in the American housing market. Banks began giving home loans to people who had no income, no stable job, and no realistic ability to repay, because everyone believed that house prices would keep rising forever. Even if a borrower could not pay, the thinking was simple: the house will be worth more next year. We can always sell it and recover the money. And these risky loans were the package together and sold the investor around the world as safe investor. Rating agencies gave them the highest safety rating. Banks held them on their balance sheets as if they were solid gold. And when house price finally stopped rising in 2006 and 2007, the entire system began to crack. By 2008, it had completely collapsed. Bank failed, stock market around the world crashed. Millions of people lost their homes. Entire economies went into recession, all because of one false belief: the price could never fall. Benjamin Graham spent his entire career fighting this kind of thinking. He believed that every asset has a real value based on real fundamentals. When prices rise far above that real value, a correction is not a possibility. It is certainly the only question is when, not if. The investor who understands this is never surprised by a crash because they never believed the fantasy in the first place. Chapter 6: Putting everything in one basket. Another mistake that has destroyed wealth throughout history is contraction without protection. Putting all your money in the one company, one industry, one idea. Employee who kept their entire retirement saving in a company stock have watched everything disappear when their company failed. Investors who put everything into one sector have been wiped out when that sector collapsed. Communities that build their entire economy around one industry have suffered for generations when the industry disappeared. The pattern repeats endlessly throughout history. Contractions feel comfortable when things are going well. When the one thing you bet on is rising, you feel brilliant. But when it's fall, there is nothing left to save you. Benjamin Graham thought the intelligent investing always includes protection through diversification, not owning hundreds of things blindly, but owning infinitely careful selected business across different areas that no single disaster can just destroy everything you have built. Protection is not a pessimism, protection is a wisdom. Chapter 7: Waiting for the perfect moment that never comes. The final financial mistake we'll talk about today is one that most people never even recognize. Are the mistakes waiting for the market to be perfect, waiting for the instantly to disappear, waiting until they feel completely confident and safe to begin. History shows that there is never perfect moment to invest. There is always a war somewhere. There is always an economic problem somewhere. There is always a reason to be afraid. People who waited for certainly in 2009 missed another one. People who always wait for the storm to pass always arrive after the rainbow has already gone. Benjamin Graham thought that time in the market is more powerful than timing the market. And the investor who starts with disciplined strategy and stay consistent through all conditions will always outperform. And the investor who wait for the perfect entry point that never arrives. Stay disciplined, be patient, keep going. These four words have created more wealth than any market prediction ever made. The final word: history, the most honest teacher you will ever have. It does not sugarcoat. It does not make expectations. It does not care who you are and or how smart you think you are. Every financial disaster in history happened because people forget simple truth. Do not buy what you do not understand. Do not borrow to invest. Do not follow the crowd blindly. Do not trust story without verifying numbers. Do not believe that price is only go up. Do not put everything in one place. Do not wait forever for a perfect moment that will never come. Benjamin Graham knew all of this. He built a strategy that protects against every single one of these mistakes, and that strategy is available to you right now. Not tomorrow, not when the market is better, not when you have more money. Right now, the biggest financial mistake of your life will be learning all of this and doing nothing with it. Do not let that be your chapter in the history. If this video gave you real value, hit the like button right now. Subscribe because we bring you the real knowledge, the honest lesson, the strategy that actually protect you and build your wealth. See you in next one.